Very good morning, guys. So what is the last class discussion? KO calculation under market value, book value. Okay, then fine. One new concept, not new concept, everything is new concept only for us. So I will explain once again. So this is a statement we are using for calculation of KO. First, we want to write sources, what are the names they given. Next, if they ask specifically book value, you have to dump book values. If they ask market value, dump the market value. So what are the values they given in the question paper? That is nothing but book values. So when it comes to the market values, there is a calculation part is involved here. So market value of equity share capital is not there. If you multiply number of shares into market price, you will get market value of equity. Very, very important point. Clear now? So if you want individual, you have to split. That is a concept name called split. Okay. Next, market value of preference share capital, number of preference shares into market price. Next, market value of debenture, number of debentures into market price per debenture. And market value of term loan. There is a no term loan market values. That's why book value is nothing but market value. What about the retained earnings? I said already here market value of equity means equity share capital plus retained earnings. If you want individually, you have to apply the concept of split. Are you okay now? Then fine. So after sources, amount, you have to figure out weights. How to figure out weights? Amount of individual capital divided by total capital. Now sum of this all is known as total capital, technically known as capital employed. So this is a way to figure out weights. If you want book value weights, book value of equity share capital divided by book value of capital employed. If you want market values, weights, market value of equity share capital divided by market value of total capital employed. Next, specific cost of capital. These are the points we learned from day one. KE calculation, KR calculation, KP calculation, KD calculation, KT calculation. Next, weights into specific cost of capital, you will get a product. Sum of all product is known as a KO. Okay now? Then fine. After that, there is a shortcut also there for calculation of KO. So directly you can consider products. Are you guys clear now? Now when it comes to, sometimes they will give all sources, sometimes they will give few sources. For this problem they provided only equity and debt. That's why I will not consider this remaining sources. Next, concept of split. What is meant by split? Generally if you want there is only split concept arises when there is a market value calculation. What is the purpose of split means? If you multiply number of shares into market price of equity share, you will get market value of equity. But I want individual sources, market value of equity share capital, market value of retained earnings. For this purpose only we are using split concept. Now how I get a market value of equity share capital? Market value of equity into book value of equity share capital divided by book value of equity. How we get this retained earnings? Same, market value of equity into book value of retained earnings divided by book value of equity. Are you guys clear? Now market value of equity into book value proportions, you will get split. So this is a calculation parts, and the common sense also applicable here. If you calculate any one of the retained earnings or equity share capital, the difference with this market value of equity is nothing but second one. Are you okay? Then fine. I think we solved illustration number 16 and 15. Illustration number 17. Illustration number 17. The following is the capital structure of ABC Limited as on 31st December 2021. Sources of finance is given. Equity shares is given. What about this 100? Market price or face value? Now these two multiplication, what you will get? Book values only, no? I said already clearly, what are the table they given unless they specify if the values are book values. Now 10% preference shares, 100 rupees each, 2 lakh rupees. Next 12% debenture, 3 lakh. My question, split concept is needed, huh? Split concept is needed, huh? Why? There is a no returned earnings. If there is a returned earnings, we have to split that. There is a no returned earnings means equity or equity share capital both are same. Are you okay now? Then fine. The market price of company share is 110. Can I name it is called P0? Okay. It is expected that dividend of 10 rupees. Can I name it is called D0? Can I name it is called D0? Yes or no? No. Expected. That is a student doing mistakes. Sir, clear, sir? For calculation purpose, what you want? D1 or D0? D1 you want. So sometimes they will give directly, sometimes they will give D0. If they give D0, you have to convert as a D1. But D1 is given, now you can take directly. Don't confuse. Now this is called D1. Declaration for the year 2021. The dividend growth rate is 6%. Growth rate also given directly. Can I name it is called dividend growth model? Dividend growth model. Now if company is the 40% tax bracket, can I name it is called business tax? It helpful for KD calculation. Next, compute the weighted average cost of capital. Point B. Assuming that in order to finance the expansion plan, the company intended to borrow a fund of rupees 5 lakh being a 14% rate of interest, what will be the company's revised weighted average cost of capital? It means KCI is a KO for above information. Case B also KO for B information. Two questions it is, not same for all. Are you guys clear now? This is called revised KO. This is called just KO. Up to A, we have to calculate KO. Again, by considering B, you have to consider you have to calculate KO. It's called revised KO. Are you okay now? Now, point C. The financing decision is expected to increase the dividend from 10 to 12. However, the market price of equity share is expected to be declined from 110 to 105. When you calculating case B KO, you have to consider case C point. Why? Case B, generally company already have 10 lakh rupees of capital. What about case B says? What about case A says? Case A says, case A says for this 10 lakhs, how much is the KO? What about the case B says? Company needs some other 5 lakh rupees. Some other 5 lakh rupees. For 10 plus 5 lakhs, what is the KO? Are you clear? If you procure 5 lakh rupees from the market, there is a D1 changes, P0 changes. If D1 P0 changes, KE also changes. Are you guys clear? For A, please solve it. For B, I will explain. Speed up. My question, book value point of view or market value point of view? Book value. Yes or no? Yes or no? If you are calculating on book value point of view, why they provided this one? KE calculation purpose, huh? KE calculation purpose, huh? Tell me. If you KO calculation based on book value means, then why they are giving market price of share? Think logically. If they want in book value point of view, this is not required. This is sufficient. But they provided market price means, what is the purpose? Market value point of view KO calculation. Yes or no, sir? My question, market value of Equity, I know. What about this market value of preference share capital? Market value of preference share capital? Book value is nothing but market value. Why? Because there is a no market price is given, na? What about this debenture? But when come to the previous problem, they provided preference share market price, debenture market price. Here they not provided. Face value is nothing but market price. Now capital is nothing but market value. Clear? Huh? Yes or no, sir? Now estimating cost, weighted average cost of capital as per market values. As per market values. Guys, clear? Huh? Sir, I have a doubt, sir. I will calculate book value point of view as well as market value point of view. Why? Because there is no clarity. But it will take time. Why? Because here you have to figure out two KOs. General KO, revised KO. At the time, if you prepare book value point of view, market value point of view for case A, book value, market value point of view for case B, it will take a time of 30 minutes. Sir, clear, sir? So decision నువ్వే తీసుకోవాలి. Previous problem ఒకే KO కాబట్టి book value, market value both preferable to calculate. But when come to this one, market value is a right one. Split is needed, split is not required. Problem number? Just understand logically. Estimating weighted average cost of capital based on market values. Don't worry, in exam they will give clear question. In exam they will ask both book value as well as market value. If they ask this question directly, at the time you have to take a assumption like this. Clear, sir? Now capital based on market values for company name ABC Limited. Sometimes for this sentence also they will give 1 mark. Sources, market value, weights, specific cost of capital, product. For the first source we have equity. Can a name it is called equity? Yes or no? Why? Because for this problem equity share capital is equals to no retained earnings. The reason is no retained earnings. If there is a retained earnings, amount of capital is different, amount of receiving is different. The receiving is nothing but equity share capital plus profit share. Are you okay now? Then fine. Tell me the sources. Equity, 10% preference share capital, 12% debenture. Any other extra amount? Why? Expansion for case B, not for case A. Now what about the market value? How many shares? 5,000 shares into 110 rupees. What about this preference share capital? Book value is nothing but market value now. Why? Because there is a no market price in additional information. How much ma? What about this 12% debenture? Total capital employed 10 lakh. Weights please. Zero point 523. 0.190. 0. AE calculation. D1 please. P0 growth. KE 0.1509. 0.150. KP calculation. When it comes to the KP calculation, anyone? You have to check irredeemable or redeemable. In question there is a no information. You have to take an assumption. Which type of preference share capital they are? Redeemable or irredeemable? If it is a redeemable, where is the N? If it is a redeemable, where is the N? There is a no N means what is the right assumption? Irredeemable. Hope you guys clear. Now when come to the irredeemable, and another point also you have to check in KP point of view. What is another point? Irredeemable, redeemable, first condition we have to check. What about the second point? Tax. Which tax? Dividend distribution tax is there or not? I think point A, there is no dividend distribution tax. You have to check information up to point A only, ma. Is it there? No. Now KP equals to preference dividend divided by net proceeds. Why? Because there is a no market price information into 100. What about the preference dividend? 10% of 100 rupees, 12 rupees. What about the net proceeds? Issue price minus flotation cost. Issue price is not there, flotation cost is not there. Can I assume face value is nothing but issue price? Face value is nothing but issue price. 10%. Okay, sorry. 10% on 100 rupees. 10 rupees. What about the net proceeds? Why 100? Yeah, there is a no clarity about the net proceeds and market price. That's why face value is nothing but net proceeds. 100. How much percentage? Again 10% only. Sir, clear, sir? Don't by heart the things, sir. Understand the things. What about next one? KD calculation. Yeah, when it comes to the KD, I have to check irredeemable or redeemable. Which one it is? Redeemable or irredeemable? Irredeemable. The reason there is a no N. Yes or no, sir? Now what is the calculation? KD equals to interest 1 minus tax divided by net proceeds. Divided by net proceeds. What about the interest, ma? 12% of face value, 12 rupees. What about the tax rate, ma? 1 minus 0.4. What about the net proceeds, ma? 100. Why? Because issue price information is not there, flotation cost is not there. At that time net proceeds is nothing but face value, na. Common sense we have to apply, ma, not concept. If there is information, I will consider. There is no information, what can I do? I need to take an assumption. Clear, sir? Okay, then fine. Answer? 0.07 or 7%. 0.072, 7.2%. 0.072. Now please multiply weights and specific cost of capital. Zero point 0.019, 0.205. Now please total. Zero point 1184, 11.84%. Any complications, ma? Completed case 1. I think there is a error in the material. Debentures wrongly taken. 6 is the wrong answer, na? 7.2%. Now this value also change, I think. What about this value? Into 100. They are considered percentages format. So we are following rate format. In textbook they followed percentage format. 0.8, 2.0. 0.072. Now tell me. Into 100. 2.05. Now add this all. 7.9041%, 1.90950%, 2.05%, 11.85%. See, 11.84 and 11.85. Clear, sir? Rectify in the material also. Completed, problem completed, no, case A completed. Just case A completed. What about the case B, Nana? Read question once again. Case B. Assuming that in order to finance an expansion plan, what does it mean for expansion plan? Company want to start another branch. Company want to start another branch. If they want to start another branch, they need how much rupees, mana? It means already company have capital of 10 lakhs. In addition that they are procuring 5 lakhs extra. Automatically KO changes, na? Yes or no? Why? Previously 10 lakh 50,000 is the capital. Now the capital also changed. Next, one extra cost we have to pay. KT. Yes or no? For this 5 lakh free of cost, you procured? No. With help of 14% of interest rate means, can I name it is called term loan? Now, equity share capital is there, preference share capital is there, debenture is there, term loan is there. Now capital changes, weights changes, Specific cost of capital not change. One will be add. KT will be add. Yes or no? And K will be change. Why K change? Due to that 5 lakhs market price decreases from 110 to 105. D1 increases from 10 to 12. KE changes. What about KP? There is no information. Not changes. Same as above. What about KD? No changes. As well as above. What about next one? Newly added thing is called KT. Now automatically KO will be changed now. Now another point. For this case B, book value is proper or market value is proper? For case B, book value KO is good or market value of KO is good? Market value KO is good. What about the market price now? 110 now? No, 105. For 5 lakh expansion, market price what happened? 105. Decreases to 105. Now, market value of equity is nothing but number of shares into 105, not 110. For case A, 110. Hope you guys clear. Small points, sir. Small points. That's why I said conceptual clarity is very important. Out of law, what you consider? Either you will consider book value or either you will consider 110. But what is the fact you have to consider? New market price. Why new market price? Because of 5 lakhs. Are you okay now? Then fine. Now what about the equity share capital, ma? Five lakh shares into 105. Amount 5,25,000. Now another point you have to add now 14% term loan. Sir, they not mentioned term loan, but we are using common sense. 5 lakh rupees of loan, either bank loan or term loan. Clear? How much, ma? How much? I said already, term loan point of view, book value, market value, both are same only. Now automatically capital employed will be changed, na? Now please tell me about the capital employed, na? 15 lakhs. Weights will be changed, na? Use this kind of presentation in your book also, you will get more clarity. So what are the areas we are affecting? Highlight with another color. Weights please. 0.3443. 0.131. What about the fourth element? Here I consider 4 now. That's why I want down also 4. 2 lakh divided by 15 lakh 25,000. 11. You have to round off with fifth element, ma. Next one. 1967. What about this one? 32,7. Fourth one. Fifth one. You have to round off with the fifth one. Fifth one, okay. Now please tell me the specific cost of capitals. You have to calculate KE once again, na? KE equals to D1 divided by P0 plus growth. Now the new D1, 12 What about the P naught? 110 na? 105. Growth rate? Growth rate. You have to consider above only. Don't take assumption without growth. Why? Why? Generally in case C, they said only D1 changes, P naught changes. They're not expressed about the growth. Now I have a I can take 2 point. I can think 2 point of view. One is without growth, another one is with growth. Okay, if it is a with growth, my assumption, what are the rate given above, I will consider for this one also. If I take without growth, is a wrong one. Why? Means 10 decreases to, 10 increases to 12. It means what is there? Growth is there, na? That 2 rupees is nothing but growth, na? That's why don't take an assumption without growth. The assumption is with growth only. Are you clear, sir? Logical points all are. FM is purely logic, sir. Clear? Then fine. Growth rate 0.06. Answer 174243. .1743. You also calculate KT, na? Yes or no, ma? What is the formula for KT? Interest 1 minus tax directly. Now what about the interest, ma? 14 into 1 minus 0.4. Answer? $8 point. $0.084. Now products, please. Products 0.0599. Next 0.01311. Next 0.01411. What next? 0.02746. 74. Now please total it. It is demo classes, ma. FM demo classes and PDA 4 demo classes. Only 10 demo classes available in YouTube, ma. If you want to purchase, you can visit Shikhara website or call given the scrolling number 6300990113. Answer 0. I think in material, one just clerical is done. That's why the answers will be different. Instead of 40%, they are taken as a 50% tax rates. That's why the answer is came differently, Nana. Ante. మీరు క్వశ్చన్ ఇక్కడ చూసారంటే కేటీ కూడా ఎంత తీసుకున్నాడు చూడు, 7% తీసుకున్నాడు. వై 7%? 50% ట్యాక్స్ రేట్, 50% tax rate, but question specifies what is the percentage, Nana. 40%. That's why the KTs are differ. The KT are differ. So don't worry about the solution. Clear? Adu 40% అని క్వశ్చన్ పేపర్లో ఇచ్చి 50% తీసుకున్నాడు, అందుకే నీకు ఆన్సర్ డిఫరెంట్ వచ్చాయి. నా ఈ ప్రోడక్ట్ కూడా కరెక్టా చూడు. ఫస్ట్ ప్రోడక్ట్ 6.0011%. ఓకే, మనం 7.43 సంథింగ్ తీసుకున్నాం, వాడు 17.43 తీసుకున్నాడు, 2 తీసుకున్నాడు. ఇక నువ్వు డెసిమల్స్ దగ్గర వాటి దగ్గర వరి అవ్వద్దు, జస్ట్ ఫ్లో, గో విత్ ద ఫ్లో కాన్సెప్ట్. ఓకే, book solution only wrong, Nana. Book solution right. When it right means change the 40% as a 50%. Clear? But for that question only we are solving, na. That's why adjust the solution. Adjust the solution. Debentures rate not 6%. How much? Debentures 7.2%. And term loan 8.4%. Now automatically weights will be changed, na? And KO also change. Just a clerical errors, Nana. Just a clerical errors. Are you okay? What about the answer? Tell me in percentage. Product total 11.45%. Previously, how much cost I paying, Nana? 11.84%. Now I am paying 11.45%. Clear? Sir, I have a doubt, sir. I am taking loan of 5 lakhs. Just think general man point of view. నేను 5 లక్షల లోన్ తీసుకుని వస్తున్నా. ఇప్పుడు 5 లక్షల లోన్ తీసుకొస్తే D1 ఎందుకు చేంజ్ అయ్యింది, P0 ఎందుకు చేంజ్ అయ్యింది? ఆ చేంజ్ అవ్వడం రీజన్ లోన్ అనే కదా చెప్పిండాడు. ఇఫ్ ఐ ప్రొక్యూర్ 5 lakhs ఫ్రమ్ ది పబ్లిక్, వై మై కంపెనీ D1 చేంజెస్ అండ్ P0 చేంజెస్? Sir? So you have a share market knowledge, then you can say answer easily. I hope you have a less or a little bit of a share market knowledge. Simple. If 5 lakh is a risk to the company or benefit to the company? Why? Loan. Irrespective of profits, I have to pay interest. Are you guys clear now? If risk came into company, as a owner, I will not continue. Yes or no? No. If there is a less risk, then only as a owner I will continue. If risk is came into the company, I will not continue. Yes or no, sir? ఇప్పుడు 5 లక్షలతో పాటు మనకు రిస్క్ వస్తుంది కదా, ఎందుకు? మనకు ఓనర్ ప్రాఫిట్ కంటే ముందు వాళ్ళకి కట్టాలి, వచ్చినా రాకపోయినా. ఒకవేళ రాకపోతే యాజ్ ఎ ఓనర్గా నేను కట్టాలి. అదే కదా దాని మీనింగ్, ఇర్రెస్పెక్ట్ ఆఫ్ ప్రాఫిట్స్ టు పే అంటే. ఎస్ ఆర్ నో? బట్ ద పాయింట్ ఈస్, యాజ్ ఎ ఓనర్ ఐ విల్ థింక్ లైక్ దిస్: risk is came into the company, why I need to continue? Yes or no? No. At that time, company will give an offer. Don't worry, what the risk came into the company, I will compensate for that risk. I will compensate for that risk. Are you clear, sir? Compensate chasnadu ante nee expectation maaripoyidga. Your expectation will be increase or decrease? What happened dividend? What happened dividend? Increases only, na? Expectation what happened? Increases. Okay? Think another investor point of view. He thinks that expectation is not good. I want more expectation. I want more expectation. But company says that I will give this much only. At that time he will leave the company. If he leaves means he will sell the shares. If a share sells, what happen? Market price decreases. See the market price? That is a conceptual clarity between the 2 points. But example ఇవేవి అడగడు, మీరేం రాయొద్దు. సార్ క్లియరా సార్? సో ఫర్ క్లారిటీ పర్పస్ ఓన్లీ ఐ ఎక్స్ప్లెయిన్. ఇఫ్ రిస్క్ కేమ్ ఇన్ టు ద కంపెనీ, ఇన్వెస్టర్ విల్ ఎక్స్పెక్ట్ మోర్ రిటర్న్, అన్లెస్ అదర్వైజ్ హీ విల్ క్విట్ ద కంపెనీ. ఆర్ యూ ఓకే నౌ? దెన్ ఫైన్. సో ఇఫ్ యూ హ్యావ్ ఎ డౌట్స్ ఆన్ ద ఫేస్ వాల్యూ considerations, put a note. There is no information relating to net price, net proceeds. I assumed face value is nothing but net proceeds for preference share capital and debentures. Write on that note point. I assumed that I assumed that I assumed that net proceeds is nothing but face value. I assumed that net proceeds is nothing but face value. For I assumed that net proceeds face value is nothing but net proceeds, or net proceeds is nothing but face value. Both are same only, right? Equal only, na. For preference share capital and debenture and preference share capital and debenture, because no information available in the question. No information available in the question. No information available in the question. Completed? That's it. Illustration number 18, Nana. Put a 10 stars for this problem. If you understand this, all points covered in the all points covered. Read the question properly. Generally, this problem taken from CA books. It what is the requirement, ma? Determine the cost of capital of Best Luck Limited using the book value and market value, the clearly mentioned. Weights from the following information. Equity shares, book value is given, market value is given. Point to be understand, you need not to calculate market value. Guys, clear? But one point you have to consider. This 20 lakh, this 200 lakh is a market value of equity share capital, market value of Returned earnings. That's why they are not given here. But student will do mistake. There is a no returned earnings for market value. Each and every point is covered here. Okay, then fine. So returned earning of book values is there, preference shares is there, debenture is there, and preference market value, debenture market value. Additional information. It's about equity, Nana. For KE purpose. Read the point, Nana. Equity shares are quoted at rupees. Can I name it is called P0, Nana? Per share. And a new issue price at in prospectus they quoted 135, but issued. This is called issue price. This is called quoted price. Not which price I need to consider. Issue price I need to consider. Clear now? So this is irrelevant. Next ma. Fully subscribed. Flotation cost will be. Now how to calculate P0, Nana? Issue price minus flotation cost. That's a P0 minus flotation cost I wrote. P0 minus flotation cost. Here I am calculating P0 with help of issue price minus flotation cost. Now what about the issue price? 125. Flotation cost 5. 120. Next dividend, Nana. During the dividend also relating to KE only, na? Dividend during the previous 5 years, dividend have a steadily increased from 10.60 to 14.16 per share. Dividend at the end of the current year is expected to be, this is D1, na? 15 is known as D1. What about the 10.6? What about the 14.19? Growth rate purpose. That's the point I said, indirect method point of view, time value of money concept. 14.19 future value, 10.6 present value. Hope you guys clear? But student will do mistake. They will consider 14.19 and they multiply with growth. The wrong answer. D1 they clearly mentioned. D1 is 15. So lot of students are confusing each and every point here. Decode properly. So 10.6, 14.19 for the purpose of growth calculation. 15 is the purpose of D1 KE calculation purpose. What about that 130, 125? Quoted price is 130, issue price is 125. Even that 125 I am not received. How much I received? 120 I received. That is called P0. Okay, na? So can I name it is called new company? Can I name it is called new company? Yes or no, sir? If it is a old company, we are coming with a market price, P0 minus flotation cost. But here I am calculating issue price minus flotation cost. First time they are issuing. Issue at 125 rupees. They received how much? 120 rupees. 5 rupees flotation cost. Clear, Nana? Okay, then fine. Growth calculation is there. For growth calculation, N also needed, na? How many years N? 5 years. So first, what's the problem number? I understand that it's a dividend growth model. If it's a dividend growth model means K equals to D1 divided by P0 plus growth. Now D1 already there in the question paper, 15. P0 equals to issue price minus flotation cost, 125 minus 5, that equals to 120. Growth rate is a calculation part. Future value equals to present value into 1 plus r power n. What about the future value? 19. Present value? I don't know r, that is nothing but growth rate. I know n. 14.19 divided by 10.6 fifth root equal to 1 plus r power 5. What about the 14.19 divided by 10.6? 1.3386 fifth root 1 plus r. What are the steps, ma? Take root value 1.3386 press square root 12 times. Minus 1 divided by 5 plus 1 into equals to 12 times. ఇట్లా ఉంటే సరిపోదు, యూట్యూబ్లో క్లాసులు కూడా వినాలి. విన్నావా? వాళ్ళు చెప్పు ఆన్సర్. క్యాల్కులేటర్ లేదు. అనిల్ సార్ని అడిగి ఒక 200 రూపీస్ క్యాష్ తీసుకో. గుమ్మడికాయ కర్పూరం. హౌ మచ్ నాన్న? డైరెక్ట్లీ ఆరా? -1 into 100 also applied. R equals to 6%. That is nothing but growth. 0.06. Answer? Zero point. %. Okay, then fine. A, B is related to KE. KR is required, Nana. KR is required, huh? Why? Because data analysis is there. Data analysis is there. First I am doing working notes. KE completed. What next? KR only, now. Now. KR calculation. What about the concept you learned in KR? K is nothing but KR. When? If there is a no personal tax, there is a no flotation cost. But when come to this question, flotation cost is there. If only flotation cost is there, or personal tax also is there? Only flotation cost. If only flotation cost, KR not equals to KE. Now what is a KR? T1 divided by P0 plus growth. Sir, same only na sir? Same only na? T1 divided by P0 plus growth, same formula only na above also. But what is the difference? T1 15, P0 125, growth 0.06. P0 equals to only issue price, that equals to rupees 125 rupees. That's the point I covered. Go and check. Why you are not removing 5 rupees? Retained earnings are not a security. That's why underwriter is not required. If there is a no underwriter, no underwriting commission. But equity shares are securities. For selling for the security, you need underwriter. That's why you have to pay 5 rupees. Understand? అర్థమైందా? సో రిటర్న్ ఎర్నింగ్స్కి నువ్వేం అమ్మట్లేదు కాబట్టి అండర్ రైటర్ అవసరం లేదు నీకు, కాబట్టి వాళ్ళకి కమిషన్ పే చేయాల్సిన అవసరం లేదు. దట్స్ వై K is not equals to KR. Now please tell me the KR. If you did wrong way, the entire problem is wrong. Very, very important calculation. Very, very important calculation. Nana, clear Nana? Why I consider above 120? Why I consider 125 here? For securities, there is a underwriter. That's why we have to pay underwriting commission. For 800x, there is a no securities. We need not to pay any underwriting commission. Clear? Then fine. KP, C is related to KP. Preference shares, 15% preference shares with a face value of 100 would realize 105 per share. Based on this, tell me, Nana, redeemable or irredeemable? Redeemable or irredeemable? Redeemable. Why? There is a no number of years. Can I name it is called net price? Can I name it is called net price? Net proceeds. Yes or no, sir? Can I name it is called market price? Can I name it is called market price? No need. Why? Because market value they given directly here. That's why you not use the word called market price. You can go with the net proceeds. Nana, clear, Nana? Student, what they do means, here they said now 125 rupees. They will multiply with number of shares. So they will assume this 105 is a market price. They will multiply with number of preference shares. Not required. They already given directly. You can dump that. Are you okay now? Then fine. KP calculation. KP equals to preference dividend divided by net proceeds into 100. Preference dividend, please. 15% on face value. Always assumption face value is how much? 100 only, na? 15 rupees divided by net proceeds 105 you received. How much, ma? 105 into 100. 14.28%. For up to here, we touched a lot of complications. Now when it comes to the KD, it's full of messy. You can observe, read the question and tell me answer. Redeemable debenture or irredeemable debenture? Redeemable debenture or irredeemable debenture? You can observe F, point number F. This is also one of the note point we learned. Flotation cost we are applying sometimes issue price. Flotation, if percentage rupee is given, we will reduce directly from the price. If percentage is given, I said in CA materials they will consider on issue price. In the CMA books they will consider on face value. But here they clearly mentioned. You have a doubt, you go with the assumption, no problem. But in one of the CMA problem also they consider an issue price. For that I said logic also. Underwriter need a more value means he will applying on issue price. If it is a premium, if it is a discount, they will applying on face value. Are you okay, sir? Read the point D, Nana. The company proposes to issue 11-year. Can I name it? It's called N, Nana. If there is a N, redeemable debenture. Think logically. Redeemable debenture. Okay. First, write down the formula. What about the redeemable debenture calculation, Nana? Interest 1 minus tax plus repayment value minus flotation cost is there means net proceeds. Net proceeds divided by N whole divided by average of repayment value net proceeds. Are you clear? Okay, then fine. I equals to interest, that equals to percentage on face value. Okay, here percentage is not mentioned. In question paper, percentage is not mentioned. But when come to the point, additional point, they mention two rates. 15% debenture, but the yield on debenture similar maturity and risk class is 16%. Now tell me the difference between that 15% and 16%, which I need to consider as an interest rate. The word they said clearly here, issue. Issue means what? At the time of entering into the agreement. How much percentage they quoted? 15%. Interest is what rate? 15%. But same type of debenture sold by some other company, they are issuing at 16%. They are issuing at 16%. But our company is which one is the interest rate? 15%. Do you understand the difference between 15 and 16? Yes or no, sir? Okay, then fine. 15% of face value, that is nothing but rupees 15. Next one, T represent tax rate. Now how much? 35%. 0.35. RB represent repayment value. Any clarity about repayment? Any clarity about repayment? ఈ పాయింట్ మొత్తంలో రీపేమెంట్ 100కు చేస్తాను, ప్రీమియం చేస్తాను, డిస్కౌంట్ చేస్తాను, క్లారిటీ ఇచ్చాడా? దెర్ ఇస్ నో క్లారిటీ. వాట్ ఇస్ ద రీపేమెంట్ వాల్యూ? ఫేస్ వాల్యూ. వీ టేకన్ ఆల్రెడీ దట్ కైండ్ ఆఫ్ అసంప్షన్స్ అబోవ్. సార్ క్లియరా సార్? ఓకే దెన్ ఫైన్. Repayment equals to face value, that equal to rupees 100 assumption, because there is a no clarity about the repayment value. Are you okay now? What next you required, Nana? Net proceeds. Can I take another assumption? Face value. Can I take other assumption? Face value. Why? Because issue value also not mentioned, but they mentioned 2% of flotation cost. Face value minus flotation cost. Face value how much? 100. Flotation cost also you have to apply on face value itself. How much percentage? 2% of 100, that equals to rupees 98. So this is a wrong calculation. Write down. This is a wrong calculation. Why? Because everyone think like that only. Repayment value information is not there. That's why you take an assumption face value, and net proceeds information also not there. That's why you taken as a face value is an assumption. Everyone do that only now. Yes or no, sir? But we here they provided information. %, 16% is the information for net proceeds calculation as per CA material. As per CA material. Understand the concept clearly. In market, so generally I am selling 15% debentures, but in market they are selling 16% debentures. Tell me, as a investor, which debenture you will choose? It means company will get money, 15 or 16. As a investor, as a company, less interest is needed. As an investor, more interest is needed. You think investor point of view. What you want? 15% debenture or 16% debenture? 16% debenture. Yes or no, sir? But if you choose 16% debentures, are you buy this unlimited Best Luck Limited debentures or other company debentures? Other company. But Best Luck also need money, na? They need to sell, na? For the purpose, they will issue at discount price. They will issue at discount price. Now other companies issued at 100 rupees, they are giving interest 16%. Best Luck providing less interest. But why investor need to purchase that debentures means they are selling at a discounted price. That's the point, conceptual point you have to understand. Are you okay? Now what is the discounted price means? How much interest per debenture? 15% per debenture means how much rupees? 15, huh? Face value, man. 15 divided by 16%. Rupees 75. If you issue at 93.75 rupees is a discounted price. Why? Because face value is 100. The discounted price is 93.75. This is the concept name called capitalization concept. The concept name called is what? Capitalization concept. Basic concept, man. I taken a loan from her, some X amount. You don't know. Her also don't know. Every month I am paying 10,000 rupees. I said it is a 20% rate. It is a 20% rate. Now how much is the capital? I taken some X amount from her. I am paying 10,000 as a interest rupees. I said it is equivalent to 20%. Now how much is the capital? 10,000 divided by 20% only, no? 10,000 divided by 20%? Use calculator, don't brain. 10,000 divided by 0.2. Guys, clearer? What we did means we capitalized. What do we means? Capitalized. Array. 1 lakh మీద 20% ఎంతరా? Okay, sorry. 50,000 మీద 20% ఎంత? 10,000. This is a calculation we know. What I am saying means, I said interest equals to 10,000 rupees, rate equals to 20%. Now I want principal of this. Shuffle the formula. Principal into rate equals to interest. Na? What you want now? Principal. Principal equals to interest divided by rate only. Na? Interest how much? 10,000. Rate 0.2. What is the principal? That only I applied here, Nana. Per debenture I am receiving 15 rupees. Per debenture capitalization rate is 16%. Now you will get a per debenture capital value. So per debenture value is nothing but capital value only, na? Okay. This I issued at a discount. On this 2% flotation cost is there. How much? 2% or 100 rupees, huh? On issue price. See, flotation cost would be calculated on common sense. If it is a discounted price, I said already, underwriter needed a commission on which value? Face value. Why? Because that is a more value. Conceptually clear? -2. Rupees 8. This is the net proceeds. This is a way to figure out net proceeds. Even though it is a CA material, June to last attempt is December, na? June 25 they asked this question only. Everyone stuck here. So some students are followed this assumption. Sir, clear, sir? Some are stuck, they are not written that problem. Some are this, they calculate like this. But maybe there is a chance for 5 marks if you write like this also. Okay? Why? Because you need to maintain a presentation good and assumptions good. At that time only they will give 5 marks, removing 2 marks for that KD. Are you okay, sir? Now what is the right way to calculate net proceeds, ma? Net proceeds equals to issue price minus flotation cost. How to calculate issue price, ma? 15% of 100 divided by rate of return. That is nothing but 15 rupees divided by rate of return is how much? 16%. What about the flotation cost, Nana? 2% of 100. Now rupees 15 divided by 16% minus 2 rupees. Answer please. 91.75. Sorry, I want net proceeds minus 2 also. 875. I think they round off 91.875. All information is available. Can I calculate KD? N 91.75 na? Then why this difference is came? 2% on face value 2 rupees only. If you apply 2% on that 93 point something, you will get different answer. Adu mention kuda chesinra. Rotation cost on face value ani. That's why here I taken 100 rupees. Clear Nana? If you apply percentage on issue price, underwriter will get a less commission. I think here also same logic you followed. 91.75. Okay, then fine. N equals to number of years. How many years, Nana? 11 years. Now substitute in the formula. Interest 15, 1 minus tax 0.65. Repayment value, net proceeds, answer. Zero point 10.95%. Sir, clear? KT is there, KT not there. Sources, book value, weights, specific cost of capital, product. When it comes to book value, split is needed. There is no concept of split. You can observe the question also. They clearly given values. Equity share capital, please. Equity share capital, rate on earnings. What percentage of preference shares? Percentage given in the additional information. How you calculated KB, ma? 15% only, no? 15% preference share capital. What about the debentures? Again, it also be 15% debentures. Book values, please. Equity share capital. Tell me in lakhs. 120 lakhs. Return earnings 30 lakhs. Preference share capital, debentures, total 195 lakhs. Tell me about the weights, ma. Zero point 6154 1539 38. What about preference share capital? 0.1846. 0. Specific cost of capital you already calculated in above. What about the KE? 0.185. 18.5% only, na? KE is nothing but KR. KE is nothing but KR. No. KE is different. KR is different. How much, ma? 8. What about preference shares, ma? 1.4. Debentures 1098. Tell me about the product, guys. 0.1138. $0.0276. Debenture 0.0050. 0.0268. Total, please. $17.3%. Any doubts on this? What next? KO as per market value. Now when it come to, I think here split concept we have to apply, na? Yes or no, ma? Why? 200 lakhs is a equity value. I want equity share capital. I want retained earnings. Now do working note for split. Market value of equity share capital equals to market value of equity into book value of equity share capital divided by book value of equity. Now what about the market value of equity? 200 lakhs. Market value of equity how much? 200 lakhs. What about the book value of your equity share capital? 1. What about the market value of book value of equity? 120 plus 30 lakhs. Answer? One 160 lakhs exactly. Now how to calculate market value of retained earnings? 200 lakhs minus 160 lakhs. Basic calculation 40 lakhs. 160 lakhs 40 lakhs. Now total also change, na? Total also change, How much? Hey, wait a minute. Preference share values I am not changing, na? We have to change. Preference shares capital book market value 33.75 lakhs. 33.75 lakhs. What about the debenture? 10.4 lakhs. Now tell me the total. 240.15 lakhs. Now tell me the weights. Wait a minute, ma. Weights, please. 0.655. Okay, then fine. Return earnings 0.164. Next. $0.138. Debenture 0.0. Use MRC kind of calculation. I want total answer. Specific cost of capital will not change for market values. Clear? But in above problem changed because of information. Nana confuse avaddu. Previous problem information cheppadu kabatti change chesam KE ni. Ikkada em cheppaledu. Kabatti specific cost of capital same for 0.17.5%. Clear, sir? Sir, when you practice with your question paper or with your material, then only you will get a clarity. Don't see the solutions. Just keep that question in front, solve. Maximum 90% you will do mistake. Rectify the mistake. Why you do like that? If you ask question yourself, you will get a clarity. Okay, నేను ఇలా ఆలోచించానా, ఇలా ఆలోచించకూడదు, రైట్ వే ఏంటి, ఇట్లా నేర్చుకున్నా ఉంటేనే అర్థమవుతుంది ఎఫ్ఎం. క్లియర్, సార్? Okay, then fine. Thank you.